It was 7:15 a.m. this morning and I opened my charts and I saw this. Okay. And here's the one thing that I noticed, this triangle. This triangle forming right here on the open. And there was no noise, no overthinking, no second doubting myself or worrying. Just this clean, reliable line here. This clean, reliable line here. So I marked my levels, drew these lines, then I waited and I did absolutely nothing. Why? Because it was not the time yet. But then the time came and we got a clean bounce in the exact area that I wanted. The entry lined up. I got the entry signal, one entry. And then on the second candle, confirmation. So I pressed my winner once, and then I got confirmation again, double down again. Okay. And the move ended perfectly. Mwah! Took the profits, shut it down. And that was all before most people have even gotten out of bed. So I want to play out this trade for you, show you exactly how I did it. And in this video, you're going to learn the kind of setup that can pay you very quickly and that's easy to identify if you're patient enough to wait for the right entry and disciplined enough not to force it, okay? So let's get into it. This dotted line on my chart here is the open, okay? So this morning, trading the open on the S&P 500 futures, this is what I saw in the open. Again, step one, I drew a line. For a line, you need those 2 points, okay? If the points are far away from each other, even better, and then you see that line getting respected, mwah, that's what we love to see. So we draw a line here, and then we draw a line here. You see it's pretty much the same thing. Connect, connect. 2 points to make a line, and then as you can see, looks like we're expecting either the line or this area. Now, one note about trend lines. It's not the trend line necessarily, it's the area around the trend line, okay? So you need to think of these trend lines as being in the general area with some kind of standard deviation. You can think of it as a big, thick line, okay, that kind of is pointing you into generally what's happening here, which is support, and generally what's happening here, which is resistance. So what I know about this pattern is a triangle is a trading range, okay? So a triangle is a trading range. That means the market's contracting, okay? The market is always in two different modes. One of two different modes. It's either contracting or expanding, just like life. Just like life. Life is either contracting or expanding. So it's the same in the markets. So what we can see here is that the market is contracting. That's a triangle pattern, and we can see it really clearly. Then I drew this. Do you see how we can see that there's another pattern inside this pattern, which shows that there's highs here being respected and lows here being respected. Now, this is very simple, very clean, very easy to identify, right? All you're seeing is that there's really like an edge here or a top. And all you're seeing is that there's an edge here like a bottom, okay? And so that's what I marked out. Now, when I saw the chart, it looked like this. And here's the note that I put on the chart. Trading range open. TR today on the open, TR. That means trading range. That means we're in what I call price action prison, okay? The market is stuck in a range and it's just reversing back and forth, ping-ponging around inside this box, all right? So then what I noticed here, we went up to test the top of the triangle on 6 and 8. Now, if you look closely on my chart, I have these candles numbered. That was 6, right? And that was 8, okay? So what you can see is the line was here. The price broke above this line because if we extend this, you can see it goes there. So now we're breaking above that line, but look, we broke above that line and failed to follow through. See how this candle is smaller than this candle? That means failed follow through. And then if this candle is smaller than this candle, and then you get a reversal candle, then that's failure for sure, okay? And then notice we came down and tried again, and the same thing happened, okay? Here, we got 2 candles above the line. Here, we only got 1 bull bar, and then immediately the bears rejected, okay? So that's showing you rejection. Rejection means reversal, okay? Think of rejection and reversal as one and the same. And that's clearly what's happening here, okay? Clear, easy to identify. It's also what happened up here, okay? So we seem to be still in this trading range. Now, if we got a couple candle closes, strong outside above here, that would be the opposite. But what happened here is exactly what we expected to happen. It went a little bit above that line. Now, maybe we would have expected us to reverse here and just use this trend line. But that's why you need to be a little bit flexible. And if you've taken my draw trend lines tutorial video, you know that there's 3 steps. And so once you draw the line, the third step is watch the reaction price to line. So we're watching the reaction. Now, we're seeing that if this candle closed above it, then maybe we're breaking out above that trend line. But then as we saw, the next candle was smaller and then the third candle rejected back down. So although this line isn't getting respected, like we're reversing before we get there, now we're reversing just after it. So same difference. Okay, cool. So we failed and then we reversed, and now we're going to test the bottom. Okay, so let's move this trade forward. This is when I said, okay, look, we're in a trading range or triangle, call it what you want. We also have the low of yesterday and the high of yesterday. So we have some support and resistance, 2 different forms here, our trend lines and our support and resistance. So we can kind of expect that it's likely that the price is going to stay within this range and continue following this pattern. Now, here's a rule for trading. Once you find a pattern and the market's respecting that pattern, and it's a pattern you want to trade the pattern until the pattern changes. Okay? Trade the pattern until the pattern changes. So that's the way to make things easy on yourself. So what I want to do is, since I missed this guy here, and since something different happened here, I wouldn't really have wanted to trade this anyways. I'm going to now wait for what happened up here to happen down here. Okay? So what we're wanting to happen is some kind of bounce off this green line, just like happened here, happened slightly before it here, and happened here. Okay? So what you can see is here was this, we could sell. It's considered a sell signal because that's right where we reversed. Okay, so if you sold there, you made money. Where was another sell signal? Oh, you could do it again. Okay, and then where was another sell signal? Well, there. We just pointed that out. So if you sold there, you made money. Now, how about if you sold there? Oh, you made money there. Okay, so here's where they're selling. So that's your sell zone up here. Okay, and this is the buy zone, sell zone strategy. And so we're gonna look for buys down here. So look. There's your buy. There's your buy. And there's your buy. Okay? So what we're going to do is we're going to look for something similar to this, this, and this once we get down in this area. And we're going to wait for confirmation. Okay? We're going to wait for confirmation. So that's what I did. I'm literally walking you through every single thing I did this morning. So we're waiting. We're getting closes. Now there's 1, 2, 3, 4 consecutive bear bars. That's not good. We want to see a rejection. Okay? But what we know is that trading ranges usually move in 2 legs. So if you actually look, this is a leg. Legs are just consecutive candles. So here's consecutive candles. Here's that's leg 1, and here's another leg. So what we're expecting here is a reversal and to get a bull bar. So we want a bull bar somewhere in here. Now, all we're going to do at this point is very simple. We're going to wait for a bull bar. And if we get a bull bar right where we expect to get a bull bar, we're going to enter long. That's it. Just like here, expecting exactly what happened here. Because look, what happened here is we got a bull bar and then we got the move up. And then look, the same thing here. We got a bull bar. In this case, we went below that bull bar, shook some weak bulls out. They were using 2 tight stops. Then we got the move up. And same thing here, okay? As you can see, happened 3 different times. As soon as we got that bull bar, move up, right? Okay, cool. So we're looking to literally do we're expecting the market to do literally exactly what it's been doing. There's no complications about that. So let's wait and see if we get it. Now we got it. Okay, cool. Now here's what I did. I bought long, okay? I wait to see what I expect. And when I see what I expect, I enter. That's it. No overthinking, nothing complicated about it. And what I did, and what I often do, is I enter with R1, okay? So if that's 39 points, then we're going to make this 39 points, okay? Just like that, okay? Now look, let me walk you through this trade, and it was very quick, and it was very straightforward. So let's walk you through it. On the next candle, here's what happened. I got a bull bar. Now I have a second confirmation. So if I did not get that bull bar, I would be concerned that we're possibly breaking out to the downside, and that could result in a loss. However, what happened after this bull bar was another bull bar. What happened after this bull bar was another bull bar. What happened after this bull bar was another bull bar. And in all those cases, we then got the move up. So what I'm going to do here is add on. And that's what I did. Then what happened? Same thing. We got another bull bar. Bull bar even stronger. Now here, I was actually waiting for a break of this trend line. We would need to see us break through this average Otherwise, I was in risk of this trade actually reversing on me and us getting another strong bear leg, which is always possible. Your trade can always go against you. Don't think you're above the market. No one is. But when I saw this, a decent close up from the bulls above the moving average, I'm adding again. Okay. So that's what I did. So now I've added once, twice. And what you have to do when you increase your risk, adding on, you're increasing your risk, right? Is you have to tighten your stop. You have to reduce your risk. And then also correspondingly, I'm going to move my profit target down. And what I'm doing there is I'm increasing the likelihood that I'm going to make money while simultaneously decreasing my risk of losing money or losing as much money. My profit target from memory was right around there. Okay. So if we keep our risk here, then we can put our we can kind of do it like that. Okay. So all you need to know is you wait for that confirmation, and if your risk management allows for it, you can add on. And then what happened on the next candle? We got another bull bar. Okay. Then I closed out, and that was it. Okay. So this was the trade. Buy here, add here, exit here. That's it. Okay. And then as I'm adding, remember, I'm tightening my stop loss. I'm reducing my risk so that I'm not breaking my risk management protocols. And that's literally all there was to it. If you have questions, ask them in the comments. Thank you so much for watching. This is a extension of the buy zone, sell zone strategy using triangles. Okay. And again, simple, easy to identify pattern that anyone could learn how to do.